Hello, this is the market as it appeared on 10/23, October 23rd. You can see down here the date stamp on the left side on the 5-minute chart side. And what I'll do here is show where my trade entry points were on the market replay program, which I have conveniently covering the account number, since this is my live my actual trading account. I don't want to broadcast the numbers, so I have the market replay program covering the numbers here. And just to show you where I've got the bracket set, I've got for each side of the order bracket, I've got the sell limits. For the buy bracket, I've got the sell limits, which are the targets, set at 3 points, and the sell stop set at 5 points. For the sell bracket, I've got the buy stop, which is the stop loss order for the sell side, set at 5 points, and the target set at 3 points for the buy limit orders. So basically what that means is I'm trading 3-point targets today, and this is usually a good place for beginning traders to start out when you don't know what the volatility is going to be. I suspect it'll be fairly high as it's been trading, but then again, 3-point targets are more comfortable to get hit than let's say 5-point targets or trailing stop loss type trades. So let's start the market here. What I'm looking for in the first trades is I want to see a fractal formation, which is the typical hook formation that we usually look for. So usually that means I don't start trading on the first bar at the open. So here would be the 6:30 opening. As you can see up here, it's 6:30 in the morning, and so this would be the first bar of the day. And I want to see a little bit of development before I take that first trade, because even though you can be correct, it often changes directions fairly unpredictably in the first few bars. So wait for that fractal formation to form first. Or the other criteria is if I have an 8 EMA crossover, I can trade the first bar at the opening after the crossover is made. So if this looks like it's maintaining the upward direction after it produces a fractal, I can take the trade to the upside. And there's no rush. I want to see what it's doing first. I want it to tell me what it's doing first before taking the trade. So we're not gambling here. We're tending to let the market tell you what it's doing first. Sometimes when you're watching in real time, you can see the indecision. So the actual traders themselves may not know what they want to do until the last minute, and then whatever the prevailing pressure is, whether it's the sentiment is long or short, they'll tend to take it in that direction, whatever wins out, the bears or the bulls. So that's approximately 3 points right there. I'm betting on the crossover as it crossed over that magenta line, and looks like it just came right to the target. There it goes. So that's the first target. There's a little bit of slippage there in the market replay program, so I didn't get the full $57 I should have got for that, or $60. Which sometimes happens in reality as well. what I can do so that there's not so much time in between trades is just speed it up until I see the next P3 point. In a trend, after a crossover, we're looking for another. Right now we'd be looking for the next P3 point. And so what I can do sometimes is just speed it up here so we don't waste so much time and the video doesn't become too boring. So I'm looking for a point that will occur on the next bar higher than this high of this bar and as close to that ADMA line as possible, the blue line. And you can see it's right even with, it's not a forward looking line, it's right even with the current price bar. So in my mind I'm projecting where it's going to be in the next bar, probably around in this location here where the cursor is. And so that's where we're looking for the P3 point to form. And we either want to take the trade on that bar or the next bar after that. So there we go. There's the P3 right there. If it comes back through the open, well, that's good enough for me right there. It's trying to come back down through the previous close. I got fairly close to that. I could have entered closer to the ADMA line. Because one of the problems is we don't know where that's going to stop. The next P3 is going to stop, so it's kind of an estimate. And we're banking it stops before it hits our stop loss order here. And it should roughly around where that ADMA line occurs is your highest probability right there. So we got that target hit. And we're already up $115 here. Usually after the crossover, if you're new, you might want to try the trade at the crossover and then maybe one more for each trend and then just wait for the next crossover. So you're doing 2 trades per side, and that's usually more than enough to make a decent living, decent income. So what I'm looking for here is either the next P3 point, or I'm looking for the ADMA to cross back over to the upside. And in either case, we'd want to be looking to trade. So let me just speed that up a little bit. Whoop. Okay, see, this would have been very obvious in real time as we slow it down here back to real time. Obviously we're making it's either a P3 point or it's a crossover trade. Now on these, because it's so far since we're so well into we'd be well into the trend here, and we're bending that ADMA bar upward, if you can see that. We don't want to be a short trader again until we start bending that bar back downward into the direction of the trend. So as long as it's up like that and it's crossing the, usually when it's going to cross the magenta, this is the 14 simple moving average line, which is also the center line that the Bollinger Bands are based upon. So this magenta colored 14 simple moving average line, usually when the price bar crosses that, that's a significant indication that you're looking at a imminent crossover, that ADMA line. In fact, many times you can actually take the trade as the price bar crosses the 14 SMA line in the direction that it's moving. So let's continue that at normal speed. I'm looking at the countdown timer here, which is actually counting up, but in reality, you don't want to look at the timer here. It's just that this is not accurate in the market replay program. So for the market replay, I'm looking at this timer here. When it hits 6:38, I'm probably going to want to be a buyer at that next open, because we have definite crossover here. And you can see why I'm using 3 points, because those are easier to hit. Given the volatility, so that really took no time at all. Hit that, and it's much more. It's easier on the nerves. If you have the patience, you can wait for the longer moves. But I like to usually hit them in the first price bar if I can, after the entry point. So we're looking for the same things here in the new uptrend here. The same things that we were looking for in this downtrend section, we're looking after the crossover into the uptrend. We're looking for another P3 point to form in the new fractal, and then we'll be a long trader. Sometimes it's very frustrating if you're not using the trailing stop loss method, because in a strong trend it doesn't give you an entry point, and so you've got to watch a lot of potential profit go by before you have an entry entry point by the rules. You could enter. The objective is usually you don't want to enter the trade when it's at the outer Bollinger Band, on the upper Bollinger Band, or the lower one. You want to try to enter the trade when it's in the center of this channel. That's why the Bollinger Bands are good measures for that, because this is like the out of bounds area, and you're waiting for the retracement to occur, and then as close to this ADMA line as possible, you want to enter the next trade. Okay, so in order to qualify, this bar would have to move below the low here to qualify for another trade to the upside. So we have to wait for that situation to occur. If our trading with a trailing stop loss type trade, which simply means trading without the target, I could just trail a stop loss and let the market itself decide how much it wants to give me, and this is the most lucrative way of trading. But for now, if you're just starting out, the simplest way is trading with targets, even though it's very simple once you're in the trade to use a trailing stop loss method. Those are a little bit more you have to be a little bit more patient to enter those, and you can get into trouble with those with incorrect timing. So I always show new traders just to use targets at first. So let's speed that up a little bit. Okay, see how this low is below this one, and we're not sure if a P3 point's made yet, but if I see enough momentum upward, I can assume that it's going to draw this ADMA line back up to where it's going to touch the bottom here. So that's possibly a good entry, or it could be a continuation of another P3 point. I just have to wait and see what it's going to do here. If it starts moving up with some momentum, I'll assume that a P3 point has been made here. And that would be my criteria for taking that trade to the upside, which is a buy. I almost jumped the gun there. That's a little bit too aggressive, but I'm assuming it's going to at least cover the distance of the last price bar, which it has. It's already hit my target, but because these are limit orders, it's got to hit it twice usually to activate it. Limit orders are different than stop orders, and for targets you usually will the software has you enter a limit order for the target. That's what we set up in our bracket trades. So I'm looking for a continuation of the same entry signals here, and as you can see, they're just a steady. This is a steady series of rising lows, so it's not offering us another point yet to get into the another trade to the upside. If we watch over here on the 5-minute chart, what that's doing over here, we see it's hugging the upper Bollinger Band here, and if we get a bar that comes below the low on the price bars over here, since it's so high up near the upper Bollinger Band, I see there's a good amount of distance between the 5-minute Bollinger Band, the upper Bollinger Band, and the 80 MA line. So that would translate to looking like a crossover on the 1-minute chart if we get a break below the low of the previous 5-minute price bar here. And so that would be a valid trade entry point. We wouldn't want to enter if the 5-minute bar was close to the 80 MA line, because there's really no room to trade before it reaches the 80 MA line and bounces back upward. So as you can see, this is opening upward like a alligator mouth opening, and so that's a sign of a strong uptrend. And what I'd be looking for if I were to trade the crossover, or the next crossover on the 1-minute chart, is a break below the low of the previous price bar on the 5-minute chart. It's easier to show that than to explain it, so I'll go ahead and fast forward to that point. Okay, we can see it's starting to look a little bit suspicious right here, because we see the as shallow. At first glance, it may not look like it's really bending much inward, but you can see it is angling inward towards the 14 SMA line on the 1-minute chart here. So that's a sign you don't want to be entering that trade right now. You want to wait for further development for that. Definitely a crossover, so you know you don't want to be long, but it hasn't made it hasn't really made a crossover yet. So hold off on being short until it's really very close. This angle has to be really tight. That's too far away from the magenta line at this point. So 1, 2, 3 points away. I want to wait till that crossover is right at the magenta line before I'm sure that it's a crossover. And we'll see that confirmed on a new bar on the 5-minute chart. So let's continue with that. as strong as that looks, see, we've got it. Actually, that is a confirmation here. If you look at the 5-minute chart, we have a break below the low here, and that's our trade. I'm expecting it to go right to the 5-minute ADMA line, and which coincides with a crossover trade right here. As good as that looks, though, I like to see a little bit more. I know from experience the markets really have a hard time changing trend direction, so I'm trying to look for a little bit of a because it's not as steep. This last crossover was fairly steep, and so we didn't have a 1, 2, 3 point here. Same thing here on this crossover here, but since we have some distance from that ADMA line to that magenta line, I'm still not completely satisfied that it's a crossover. Now, if this were to just keep on going downward, I missed the trade at that point, and I have to wait for it to come back up to the ADMA line and trade in the new direction, which is down. So, in either case, I err to being patient rather than impulsive. So just let it develop here. See, if I would have traded right there, that would have hit a 3-point target. So there's always points where when you're going to miss the first trade. So what I'm waiting for now is just to enter at that ADMA line. So we've got essentially what we're making here is a 1, 2, 3 top formation, and I've seen these go ahead and continue with the uptrend. If you were going to continue with the uptrend, you'd want to make sure that ADMA line is once again angling upward and away from the 14 SMA line before taking the trade to the upside. So this could also be a 1, 2, 3 formation. So basically it's in no man's land right here, and it's saying don't take a trade either way yet. Let it develop more. And here's a good indication that of what you're limited on. The Bollinger Band is showing you where it's really coming down, so that's limiting. It's acting like a ceiling as it turns into a flat trading range area. That it's showing you that you really don't have much potential to the upside here to trade anyway. So be very cautious about considering an uptrade here until you know for sure it's not in a changeover or a crossover. I'm getting ready to sell here. But you see how it tests your patience. You know, it could have even got a 1, 2, 3 point trade right here. But you don't want to trade when the line's angling in like that. Still moving up. I have to see a good thrust to the downside before, because I want to trade on momentum before taking a short trade here. Okay, you can kind of see that thrust happen, and so that's my short entry here. Some of these can really try your patience on hitting your target, but that's one of the potential problems with timing. You can risk getting your stop loss hit if your timing's a little bit off, and that's a 100-point stop loss, so I don't want that 100-point loss. And if it really looked like it was moving back upward, I would probably reverse my position. On paper, these crossovers look so easy to spot, but you see in reality they can really test your patience because they're very slow a lot of times. It's actually like trading in slow motion. Ideally, you'd want to wait for this Bollinger Band to bend downward. So if that trade didn't look too good, I could probably get the next one when I was sure that the trend actually started. So that was kind of a riskier trade there. Since we're flat, I'm not sure that this is really a trend continuation right here. I'd have to see a little bit more development, such as the Bollinger Band start to bend downward, and I'd have to see the ADMA really start to angle. As far as I know right now, this is a trading range, and I'm looking for the next upside trade. But now it's starting to look a little bit weak. If I get a break, a lower trade here, and then it comes back up and gives me a P3 point, then I can take the trade to the short side. But as of now, I really don't know what it's doing because it looks like it's in a flat trading range here. And so the whole key of trading is let the market tell you before taking it. You never want to guess or speculate, even though they call this speculation, but it's really letting the market tell you what it's doing before you're committing to a trade. So right here, I'm seeing it trying to break below this low right. This low right here is sort of acting as support. You can see the support zone. So I think a break below here I'd want to be short. But I want to anticipate that break, by trading as close to that ADMA line after a P3 point has been made as possible. See, I don't know if it could be continuing upward, so I'd have to wait for a crossover to the upside before trading long. As long as this ADMA line is below the magenta line, you want to trade that side of the market. I'm fairly convinced it's moving outward. You see how it's bending outward, the Bollinger Band? Those are the kind of cues you want to look for when they start expanding outward. Then you know a trend is forming. When the Bollinger Bands are contracting inward on both sides, that's an indication of a decreasing volatility. When they start to balloon outward or bend outward, like a bell end of a saxophone or something like that, that's an indication of increasing volatility, which would signify a breakout. That wasn't much of a breakout, but it was enough to hit a target. So let's see if this downtrend will continue here. Again, we're looking for the same criteria. We're looking for another P3 point. We do the same process every time. Only one trade per fractal is all you really need to do. You can see our trade weight really isn't that. On paper, it looks like we're trading a whole bunch, but it's really very leisurely. You're taking your time making these trades. Very shallow downtrend here, but we've broken through support. So I know from experience that these tend to pick up speed. You know, they'll start shallow at first. You get a breakthrough of support and it'll start to accelerate downward. This right here is what I would consider an inside bar. I could have probably traded the opening here. By inside bar I mean it's this forms a number 2 point right here, because it's lower than this low and lower than the previous low. And so this probably would have been a good trade entry point right here. But we get a number 3 point here because the close is high here. I would want to enter the trade at the next open, because this close is higher than this open here. I don't want to enter when the momentum's going the opposite direction of my intended trade direction. So that looks like a crossover right there. I might have missed it. If you look at what's happening on the 5-minute chart, I'm looking at a possible trade back to the ADMA line here through the previous close there. It's too ambiguous right now to take one direction or the other. Oop, I accidentally entered 2. Because it's coming back through the ADMA line. So that was kind of a risky trade, as you saw, because it's still flat, and usually on a trading range, if that's what it is, or a congestion, we want to take the break out of the congestion. Or if we're trading in a trading range, you only want one trade per each side of the channel. But I was it was a judgment call, because I was seeing it come through the previous close here on the 5-minute chart. It was dropping below this previous close, and we have a lot of room to the ADMA line. At the line, I know it's either going to do two things. It's either going to bounce back in the trend direction, or it's going to try to bend this ADMA line downward and try to cross over at the 5-minute 14 SMA line, the magenta line here. Now it's looking like it's crossing over the upside here. But I can't be sure yet. So even though that looks like a crossover, I want to really make sure that it's crossed over and it's trade the bar after the crossover has been made. You see how it just it fools you into trying to make a decision there. I think on this trade I got lucky. I saw that it made a number 3 point, and I traded as it moved back through the ADMA line, hoping that it would hit the outer Bollinger Band, and it was coinciding with the move through the close here. So we don't have much room to the upper Bollinger Band here. And it still looks like it's part of this congestion. A congestion is a small trading range. It's typical for it's oscillating price bars between oscillating highs and lows, all within the same range. Or if you were to take this bar as a measuring bar, and they're all within the range of that bar, that's typical of a congestion area. And usually you want to trade the breakouts of those. You don't want to trade within congestion, or your chances of getting what they call whipsawed is pretty high. Now, whipsaw is it'll move one direction and sucker you into a trade one direction, then suddenly change direction the other direction, and so you keep nickel and diming yourself to death. So just be patient and wait for the breakouts of congestion areas. Don't try to trade within them. My guess right here is that it looks like it's trying to break out to the upside, but you never know. It could just change, reverse and change positions here. The key is patience, wait for the crossover, and then wait for the following price bar to confirm it, and then commit to a trade trying to get into an emerging trend or breakout. See how it's changing direction right there? I know it's all of its little tricks like this. It takes time getting used to it. You just have to see it, then you get used to the market trying to fake you out and get you into a trade that you shouldn't be in. Just have patience and wait them out. Some of these congestions, they can last forever, but some traders look forward to those because they see the longer the congestion area is, the better the breakout's going to be when it occurs. Usually, typically you'll get a very strong breakout, one side or the other, and they're bounded by resistance and support. Here it looks like it's starting to break out, but I'm going to let it confirm it for sure first. It's trying to break out to the upside, if you can see that. We've got a crossover to the upside right here, and if I'm going to be long, I want to make sure that the breakout's really confirmed here. So I'm getting ready to buy. I want to see those Bollinger Bands start turning outward. Yeah, that wasn't too convincing. So as you can see, the Bollinger Bands are angling inward. So even though if I would have got long right at that crossover, I could have got 3 points, but I'm still trading with a congestion area. So yeah, it's better to err on the side of caution and just stay safe. If you're really aggressive, I could have traded right there as it merged, and I knew it would have enough distance to hit my target because you see where the upper Bollinger Band line was. So that was about 1, 2, 3, 4 4-point trade. So a 3-point trade would have fit well in this area, but you don't need to trade everything. Even you don't need to take risk. If it looks too risky, then just wait for the next one. Something like this can really try your patience because it looks like it's just going to last forever. But right here we're getting a breakout, I think, to the downside. See how I broke out of support here? Now, I could regret doing that because I'm trading a long distance from the ADMA line. See how it's coming back to the ADMA line? Always the best bet to not trade at the Bollinger Band. Right here you can see the entry is right at the lower Bollinger Band. So you're just going to save yourself a lot of grief if you try to avoid trading in those locations and try to trade as close to the ADMA line as possible. But see, right here I'm banking on a breaking through the support area. Okay, so you saw what happened right there. The breakouts of support and resistance of a congestion area are usually pretty good. So we should start a trend here. So I'll accelerate it to the next P3 point. That's what I'm looking for. I want to see it hit that ADMA line. And right here I couldn't go short because it's bending that line upward. So if I do go short, I want to make sure that this line is bending downward away from the 14 SMA line. So that'll be my criteria for taking the next trade. Because I know this is a P3 point. I know this is a P2 point right here. Actually, this is a P3 point right here, but we didn't have contact with the ADMA line yet. So again, I want to enter as close as possible that ADMA line after I make a P3 point, and if I make contact with it. That's the best possible area. So the next bar, probably at this opening, will be my entry point. There we go. But even there was a little bit too far away from the ADMA line, because we're looking at a bit of a congestion area right here. The short congestion areas I usually call shelves because they look like shelves, you know, small areas of flat sections. And a lot of times you can trade the breakouts of these flat areas. But I would have been a lot better if the closer I traded to that ADMA line. Since it's in a fairly steep downtrend here, I'm anticipating a breakout, and the P3 point has already been made. We're coming back through the ADMA line, so I think it's a pretty good bet that we're going to hit we have a breakout of that low here, and I don't like what it's doing here. That's a bit of an anomaly right there. This is usually a pretty good sign it's reversing on you, so I'm going to try to stay disciplined and not move my stop loss. That's my insurance policy. So if that gets hit, you know, I just take $100 loss, and we're already up at $565, so we can afford a loss at this point. But it hit my target. So if you examine what happened there, this looks like a perfectly good P3 point, and so that's a good trade entry right there. But this is sort of an unusual anomaly because it made another P3 point right here, and so that's just the way some irregularities like that occur from time to time. But usually you're not going to go wrong the closer you trade to that ADMA line, as long as it's angling outward from the magenta line. And so it met that criteria, even though it started to bend inward a little bit by the time the entry point was reached. the ADMA line was moving away from the magenta line. So those are good odds right there. Those are the criteria you're looking for to increase your odds, even though it wasn't a perfect entry point because of this unusual extra P3 point here. If you really see right here, you could trade a 5-point target and hit your target, but or I could enter another 3-point trade right here, but that's kind of a judgment call because you're not sure. What you'd be banking on there is that the breakout below support has been made, and so you're pretty good odds this next bar after the breakout bar. This next bar would have been a good odds trade right there that I missed. But yeah, that would have been a good entry point right there. I just missed it. I don't hit them all. And you can see it's trying to here's another thing I look for in that lower Bollinger Band. You see it's starting to bend inward as this is coming inward, which is a sign of decreasing volatility, and it's making a small 1, 2, 3 bottom here as it's bending inward. Now if it comes across that magenta line, that's a good sign that there's a crossover that's imminent. So all these indications here are what I'm looking for the next crossover trade, which would be to the upside. But I want to make sure the crossover occurs first, and then I'm trading pretty confidently that the crossover has occurred, and based on what we're looking here on the looking at here on the 5-minute chart. So right here we're seeing conflicting information. We're seeing a crossover to the downside. So I would need to see this trade. If I'm going to trade the crossover long here, I want to see it some indications in the 5-minute chart. We'll look to this as a guidance to see what's going on there. At the same time, we're looking at a crossover here. Okay, we see it's a reversal bar here, and the question is if I've already missed this trade or not. This might be a quick. It's probably a little too risky there, but I should have. If I was going to enter this, I should have entered right at that point here as it crossed the magenta line. Because at that point I know it's got a good distance to the top Bollinger Band here. So this is what I would call a quick scalp trade. I'm trading in the right direction, but we see what's happening in the longer term is that the 5-minute ADMA line is crossing to the downside. So I'm really trading against the market here on a retracement swing. And I don't have a lot of room, but I probably have enough room to reach a 3-point target. I just may have missed the entry here because I had it sped up. If I'm feeling aggressive, you know, I've already made $600. That's a higher odds trade right there because I'm going against what the 5-minute chart's showing me. But I may feel like it's a worthwhile risk, you know, given the profit I've already made. So let's see if it comes back to the entry point here. So in this case, I'll have my button on the exit at the market and cancel. in case I don't hit my target here. Very suspicious that it will hit my I'll just get out of it. So that's kind of the judgment process that I'm using there. If I would have held on, you can see it would have hit my target, but at the time of entry it looked fairly risky. And it's on the 5-minute chart, it's coming back up through the ADMA line. It's probably going to make a hook formation here before moving back downward. And so we're looking at a long scale here and a short scale here. And when they're in conflict like that, that puts up a few red flags to be a little bit extra cautious. So let's just speed that up a little bit. The next entry point. You can see right here it's kind of entering a probably missed a trade right there. Yeah, that's a very I like to see a little bit more space between these crossovers here, but you can still see it's following this basic sine wave cycle. Like here's the up section, here's the down section, here was the up section even though it's shorter, and now we're coming back through the down section. So if you're following that cycle and you're just aware of it, I could have had a quick trade right there as well. So let's see here. If that's going to commit to a crossover, this Bollinger Band line could be curving outward again. So I'm going to wait for more development here, and I may be able to get short at the close of this bar right here as it comes back through it, because I think what we're looking at here is a crossover, and if this starts moving down in a typical trend, we're also looking at a breakout of the support right here. So those are the kind of setups I'm looking for. Well, this video is getting kind of long and boring. I might end it just here and then break it up into a different section. See, when the ADMA line is resting on the 14 SMA line and they're both parallel, that's kind of no man's land. And when the Bollinger Bands are flat, I really don't have a good sense of direction there. So yeah, it was hard to make that call. So I think it's enough momentum. That's kind of a risky entry point, but that could be enough momentum to break through the support there, hit the target. Which is why I'm using 3-point targets, because those are much easier to hit if your timing's a little bit off. What I was waiting for there is to make sure that it was heading towards a breakout, and so I wanted to see a little bit of momentum. But the sacrifice there is I'm not entering right on the ADMA line, so it's a bit of a judgment call. Okay, so you can see why you can see that it came right back into the trading range. So that was a false breakout. Here was the support. It broke below support, but came right back up through it. So it's still acting as a support area. And at that crossover right there would have been a good point to go long, but since I'm a little bit late because I had it sped up, I'm not going to take that trade, because trading range rules are usually one trade per each side. So if I miss the entry point, I don't want to try to enter it close to the Bollinger Band here, because that's starting to act like, when it's flat like this, you can see how the Bollinger Band acts like a ceiling. This would act like a resistance area, and this acts like a floor or support when it's flat. When it's at an angle, you can trade right into the Bollinger Band because it's likely going to hit your target easier. But here it's limiting your target when it's flat, sideways. So that usually only leaves one side, one trade per side. This might be a good point to leave off with this section, and I'll see if I can continue later. You can see right now my actual time is 2:39 in the morning.